All right, folks, welcome to Chart Attack. This is Vishal from Equity Guru, and yes, the stock market is going to be crazy this week. Take a look at the economic docket, and this is basically this is the way we end off, I would say, 2021. Obviously, we have 2 more weeks, but those 2 weeks, the Christmas period up till New Year's, tend to be a bit quiet. We have UK employment numbers. Wednesday, as you can see, I have noted down a crazy day with New Zealand GDP, Chinese retail sales numbers, US retail sales number, Canadian inflation numbers. You see here I have in stars and bolded the Fed interest rate decision. That's what we're going to be talking about in just a minute there. We also have the Australian employment numbers, the Swiss National Bank interest rate decision, the Bank of England interest rate decision, and the ECB rate decision on Thursday. So Super Thursday, as they call it. And then finally on Friday, the Bank of Japan. Very quickly, I think the Bank of Japan and the Swiss National Bank rate decisions we can sort of put off to the side. Although the Swiss one I'm a bit interested in just because of what the Euro-Swissy pair has been doing. The Swiss franc has been appreciating against the euro, and because the Swiss export a lot of stuff, you would think they want a weaker Swiss franc, but they're in negative interest rate territory. So what are they going to do to weaken their currency? We'll have to see if anything is said on Thursday. And then the Bank of England is actually a bit interesting as well because they are sitting at 0.10% or 0.10%, whereas Canada and the US is sitting at 0.25. And there was talks that the Bank of England was going to raise rates a few months ago or last month up to 0.25. So basically, they would be in equal terms with the US and Canada, but they didn't do that. And there was a lot of media articles at the time saying, hey, maybe people are beginning to lose confidence in the Bank of England. So that one will be an interesting one, especially given what the Fed might say on Wednesday. And as you guys can see, the Fed rate decision happens first, and then everyone else will follow. And I think, a lot of eyes are a bit more on the ECB because of the euro-US dollar currency pair. And obviously the Fed is going to be taking center stage. So let's take a look at the S&P 500 here. You guys can see my channel trend lines here are still intact. I think the last time I talked about markets here on Chart Attack, we were looking at this resistance zone here, and we called this support zone at the 45.50 zone, where we did actually bounce from. There's a big battle there, but we did bounce from that zone, and now we're back at 47.10, our major resistance zone. You can see here, look at all the wicks, 1, 2, 3, 4, 5, 6 wicks, including today. So it's an area that looks like it's about to break out. But the sellers always pile back in, and we get a close back below 47.10. So if you're going to be trading this market, folks, I would wait, be a bit patient, get that daily close above 47.10, and then go long the markets. But right now, this zone is acting as resistance, just like it did from November to all of November, basically. All these trading days, we just ranged until we finally sold off. And the question is, are we due for another sell-off like this in the upcoming days? When I mean upcoming days, I particularly mean Wednesday on the 15th, because that is, of course, when we have the Federal Reserve interest rate decision. They're not expected to raise interest rates, but the question is about the tapering. Are they going to increase their taper, and what does that mean for the stock markets? There's sort of two camps out there. For the camp that believes that, hey, the Fed has to taper because the economy is doing well now. But then, in a way, is this market propped up due to the cheap monetary policy that we've seen? If so, is that Fed taper going to lead to that famous taper tantrum, right? If the Fed does taper quite a significant amount, which of course they have already done. They've been purchasing $120 billion worth of mortgage-backed securities and bonds or treasuries basically every month. They taper that down to $105 billion per month, and now they might bring that down even lower. And then the second camp, the other group of people are looking at the Fed's decision and saying, hey, wait a minute, is the Fed doing this because they have to prep for rate hikes because they're losing control of inflation. And I think this is now going to be a key thing going forward, depending on what the inflation numbers come out in January and February and March. If those come out quite high, then we're at that point where the market might start beginning to question the Federal Reserve's, transitory inflation story. And mind you, the Fed has gotten rid of the whole transitory story, right? But they still do say that inflation is going to be here till mid 2022. The question is, has inflation actually peaked? That's the big question going forward. And if it has not peaked, then people might be, looking at the Fed's taper this month as a way of saying, oh, holy cow, the Fed might be doing this because they have to get ready to raise interest rates quickly in a short amount of time in order to combat this inflation. But of course, folks, from now till then, anything can happen. Anything that could maybe, you know, get us back in the cheap monetary policy, easy money zone. And as I say that, actually, I'm seeing here trending now is Omicron can hit the fully vaccinated. So, if something like that happens and, we see more cases, more restrictions, more slowdowns in the economy, obviously the Fed's probably not going to taper. They'll probably reverse their taper and go back to easy money policy, which is something, of course, that these stock markets would love. So I don't think, we're at that point where this is going to be a big, big market crash just yet, because I think, the taper can happen, but really there's still nowhere else to go for yield, right? If interest rates remain low, basically you have to be in the markets. Other people are looking at cryptos or whatever to make yield in this world. And I wouldn't really get too worried until the Fed starts to actually increase interest rates. But I think as a trade, we can watch this level here at 45.50 as our major support zone once again. And some of you can actually see I've drawn this this interim support level here, just because we've been holding this range now for 4 trading days. So if we go down to the 4-hour chart, look at that, folks. Just like magic, today's price action actually bounced from this support level. And perhaps if we are going to take an interim short heading into Wednesday, if you get a 4-hour close below this 46.67 area here on the S&P 500, I think that might set us up for a run to 45.50. But again, just note the event risk with the Federal Reserve. I tend to not trade when the Fed's upcoming. I like to wait till the Fed's done their press conference and until the market takes a day to basically digest all the information. Just the market volatility is not really appealing to me. Why take a swing trade when there's a risk of me getting stopped out because of some stupid market volatility? Might as well just wait for the market to calm down a little bit, and that's sort of my game plan. But it is looking quite appealing for a short, maybe up till Wednesday, and then we can close our position then. But 2 things also that I'll leave you with. Let's look at our risk gauges here. We have the VIX, which was green today. Nothing crazy like last week, but it did close green here today. And then we'll also look at the move in bonds. Yes, there was a move in bonds, so a move from risk on to risk off assets here. And then finally, let's just take a look at the US dollar. If I can find it, the DXY, I have a lot of currency pairs here that I'm watching, and the dollar it's still holding a range. So nothing really big going on here, but I would be watching the dollar because if the Fed does initiate that taper, people are going to be beginning to price in rate hikes, maybe more sooner than later, which would be bullish the US dollar. Although some people might say, hey, this breakout in the US dollar has been all about this anticipation of a stronger dollar based on a Fed taper. So very, very volatile week here. And it will be an action-packed week before we end off and say goodbye to 2021. But be careful out there, folks. I think a lot of people are anticipating this meeting, and a lot of people and the market is expecting some sort of taper announcement. But we just don't know how hawkish the Fed would be. But the markets are testing an important resistance zone. And now we just wait for a breakdown, or if we get a candle close above our 47.10 zone, then our opportunity to ride And again, I'm not saying that a move lower is necessarily a crash. I think it probably still presents us with a buy the dip opportunity as long as we stay above 45.50 and as long as we stay above my uptrend channel line here. But that's it for me, folks. If you guys enjoyed this video, give it a thumbs up. Be sure to follow us over on all our social media links, which are provided in the description box below. I do have a Discord channel, or Equity Guru has a Discord channel where we talk about markets every day. So if you want to be notified about this 4-hour break, definitely do follow us there. And finally, let me know what you guys think about this market. Is this still a buy the dip opportunity? Are you guys buying the dips here, or is this the market top? What is your opinion? I really want to know. And I'll see you guys in the next video.